Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sideways action on the Bitcoin chart. And what we do see is that, we did get some of that play that we were talking about in the last episode. So let's just go ahead and take a look at that just for transparency. And actually, the 20 SMA is pointed even more down. So this could end up having a pullback just as easily, sort of like up here, just kind of like pulled back. And so but flipping this area, flipping this yellow line and this yellow line, then that would suggest that that squeeze is probably on. And then you have a natural limitation here over at the 200 at 26,760. So there you go. Probably we could see a pullback and then a pump to 26,700 and 50-ish, right? And so let's just go ahead and see what I was marking out in the group Discord yesterday as well. I was just emphasizing that play, spelling it out for you guys based upon the momentum pool and the volatility pivot there. Another one of these kind of mean reversion plays. And guys, I obviously said that we're going to have a pullback and then we're going to see if we can flip that momentum pool, right? So guys, let's just go ahead and see how did this work out. Well, we did in fact get that pullback right here. We basically tagged the volatility pivot as I suggested and then popped up, and you can see the momentum pool back here in the background. We ended up chopping in it, but we did flip it, and then we had a natural limitation. Where did I say? Right there at the 200, right there at the 300. And so in this area is where we did see a rejection, and now we're just coming back to retest the volatility, the momentum pool, because we didn't even get close to the bullish control zone there. So that was a pretty hard rejection off the 300 on the 1 hour. Guys, we can also take a look at this from the other time frames. So let's just take a couple look at a couple of them, and let's just take a look at the 6 hour chart to see if this one did anything interesting. And yesterday's 6 hour chart, you can see that we did get above the momentum pool here, and then we did pump up to the neutral point of control. So again, sitting on top of that momentum pool, usually you can get some type of projection to the next level. We did get the general continuation, passed through it, and then we got rejected off the neutral point of control. So that should have told us, based upon yesterday's key levels, rejecting there, you can see the wick just dropped right back down just immediately, that suggested that bears were still in charge. And so what happened? We're just coming back to test the momentum pool. That's what happens. You get on top of the momentum pool, you pump to the next level, you get rejected by it, right? And then you're going to come back and retest essentially. If you were accepted and you were able to flip that level, then you'd be looking at the next level above it. However, the volatility pivot was above our head, and so that does usually suggest a headwind. Again, guys, this was yesterday's setup, and I explained that to you in the video. If we take a look at it from a daily perspective, then you can see just how, sideways we went essentially. So this was the previous day's candle, and it just basically filled up the momentum pool there. It really didn't do anything. We did tag the volatility pivot, but we got rejected by it. Now that's kind of a bearish thing. You want to be accepted above the volatility pivot because again, you want the volatility pivot and the momentum pool at your back. So getting rejected by the volatility pivot, it's never a good thing. And, it did suggest that we were just going to come back and try again at the momentum pool. Now, we didn't actually get smacked below the momentum pool, so, we weren't in any immediate critical danger. Again, the momentum pool is just like no man's land, just kind of like a waiting area. So let's go ahead and go to the new charts. So this is the fresh charts for you guys. So let's just go over to the 1 hour, and the 1 hour we can see. Oops, that's the old one, sorry. The 1 hour, we can see that, we do have this really condensed area that we are looking at. And as of right now, we are underneath the momentum pool and we are underneath the volatility pivot, which if I just zoom in here, we can get a little bit more detail. And you can see that we're dropping pretty heavily off of that. So what do I say? When you're underneath the volatility pivot and you're underneath the momentum pool, then you can expect some type of a drop. We do have the bearish control zone down here at 26,241. Not sure if we have any really important EMAs over here that could catch us, but maybe some SMAs. We do have the 100 SMA over here at 26,400-ish. So maybe if we do drop, maybe we get a little bounce there. But this thing is really pressing against this line here, and we're starting to just create a bit of a distribution wedge. So if this thing doesn't flip it to the top side and get above the momentum pool, then what's going to happen is that pressure, because these buyers down here are going to get exhausted. There's only so many of them. You can see each candle, it's getting less buyers and less buyers and less buyers. Then eventually no one's going to buy and the price is just going to drop. Okay, so that's kind of the play that you would be looking for, assuming that we end up breaching these lows down here on the 1 hour. Of course, if you did want to look at some type of a bullish opportunity, then what you would be looking for is to flip the volatility pivot up here at, what do we have this? At 26,489. And if we were able to do that, then being above the volatility pivot is a pretty good place to be, but we'd want to get above the momentum pool additionally, which is also above the neutral point of control in this case. And so that is a great orientation. It's also right with the general continuation on the hourly. So all of these key levels are essentially saying you want to be above 26,500 or you're in risk of just dumping. Okay, so 26,500. Very important for this hourly chart, assuming that you're doing those smaller time frames. And of course, you can see the squeeze is already going to the downside here. So, we can expect this might break, right? Guys, let's just go over to the 6 hour, and on the 6 hour, you can see that we are underneath the Bollinger Bands, and we are just embedded in the momentum pool over here. So, not much to say about that, except that this looks a bit like a rejection. We weren't accepted above what is today the neutral point of control. Let's see, what did it look like yesterday? Yeah, same thing. It was also the neutral point of control at that same level yesterday. So we just weren't able to put bulls in charge in general, right? And so bears still have a little bit more control over the chart being underneath the neutral point of control. And the good thing is that we are above the volatility pivot here at 26,370. And should we be able to flip the momentum pool at 26,500, there's that 26,500 number again, then there is the possibility that we're going to get scooped up by the Bollinger Bands midline here. And should we be able to flip that neutral point of control at 26,676, then we could see a nice pop in the charts, potentially put on our EMAs. And yeah, that 21 and the 9 would allow us to pop should we get into that type of formation. So that's what I'm seeing here on the 6 hour. Otherwise, if we do get embedded below the volatility pivot at 26,370, again, we could just go for a drop. 25,960 looks like a interesting level down there. Should that hourly squeeze to the downside end up becoming a 6 hour squeeze to the downside. However, again, we are above the volatility pivot on the 6 hour, so don't count it out yet. We're just halfway through the momentum pool here, and there is a chance for us to get above that, and then that would be the play to take essentially. Let's see here. Let's go over to the daily. Sorry, guys, I'm a bit low energy today. Just got really, really tired, guys. But yeah, here on the daily, we can see that we are underneath the volatility pivot. and we are underneath the momentum pool. So in this case, this type of setup right here, that's not really a good thing. This could easily just push us to the downside. So overall, I'm biased to the downside at the moment, but again, like they're all so close to the areas that they need to flip because we literally just need to get above 26,508 just to be like swimming around in kind of a neutral territory, okay? Yeah, there's a little bit of a bearish bias here because underneath the volatility pivot, underneath the neutral point of control, that's going to be kind of a double bias to the downside. But should we get into the momentum pool, that's usually a nice holding area. That's why this is called the hold momentum, right? And so the bottoms of the candles are rising here. We get another candle inside of that, and we could potentially just hold once again. But in the current orientation, definitely the bias is to the downside. If we put on our EMAs, we can see, yeah, just everything is pointed down. So, good luck flipping that. I'm not sure what's going to do it. But, we did get this nice bounce down here. And so if bears just think they can't break this area, then, maybe they're going to try again and fail. And then that's going to create maybe a W that ends up taking us out of this place. Just, usually you don't break through the 300 and the 200 in the first go. So it isn't unusual to try at it a couple times and then break through. And I just, if it was any other EMA, I would say, this bounce means that we're going to just continue in the opposite direction. But if bears really want to be hammering, jackhammering this 300 and the 200, they almost always have to take a couple different shots. It's not just like this one where we just like fire up and it takes a while to come back. This one, like it's coming right back at it. So we'll see. We'll see what happens. Again, we have to be above 26,508, preferably above 26,600. So there's that 26,000 kind of 500-ish area once again. And you can see that the volatility pivot threshold here on the daily is 26,840. So that raises our standard just once again, guys. Let's go ahead and go to the 2-day. And the 2-day is suggesting that this is interesting. We are in between the 200 and the 300 EMA. So we do actually have support on this 2-day, which is closing in 19 hours underneath us. And it looks like that we are in a good position to potentially get scooped to the upside should we be able to just get just a little bit higher. But right now, just not doing it. We could easily get squeezed back to the downside. We are above the hold momentum, so nothing terrible here, but underneath 26,346, and moreover, underneath 26,000, basically 220, I would say that we are really at risk of just dropping down to this 25,000, maybe 25,500 again. So we do have to watch that. Now for the play to the upside, we really need to be above 26,800. And so there's 26,800 again, and you don't get the volatility pivot on the 2-day until 26,900. So once again, the standard is just being raised, the higher time frames that we go, and that's not what you like to see, okay? Usually you like to see the higher time frames supporting you more than the lower time frames. That's suggesting that you have like a huge kind of hill to build on. But in this case, you've got like overhead resistance on higher time frames. That's not a good thing. Okay. So let's go ahead and jump over to the 5-day, which will also be closing in 19 hours. And on the 5-day, again, just very similar, okay, to the 2-day and the daily. We've got the volatility pivot overhead. It's way overhead at 29,200. Very unlikely to flip that, so that does suggest that we are going to be bearishly postured on the 5-day. Now, we did get a nice bounce here, but is that enough? I don't know. We're narrowly avoiding, you know, this 35.21 squeeze, but we're absolutely in a 9.20 squeeze and a 200.21 squeeze. So this is going to have to pull a rabbit out of its hat and basically get above 27,000. I would just say 300 to be safe, and then 28,600, if you want a real chance. And again, guys, like very little to say until we're above 29,200. Now, this number will probably be coming down. Sometimes it goes up for some, for specific reasons, but usually when price is below the volatility pivot, the pivot will come down over time. And so this threshold may get more easy to conquer. So I guess we could just say 29,000 is where we want to end up being at. But I mean, that's pretty far away right now, considering, the very weak movement that we've been having on the charts. So, is that hopeful? I don't know, but we're going to be underneath the volatility pivot. We're going to be underneath the momentum pool on the 5-day. And that combination just has never been good. Look, we've been trying to get back above the 200 on the 5-day. We just haven't been able to do it. We retested and we lost it. And not only did we lose it, but we got into a 9.21 squeeze to the downside, and we're gonna close the week underneath the 21 here. That's like a really bad look, guys. Okay, you don't want this 21 curving down. That's horrible. Okay, so we could recover above it, but closing the 5-day underneath it, it's a very difficult thing to recover from. Now, one thing that we can say is that we did have that over here, and the very next candle we did just bounce like crazy off of. So I'm not going to count it out, I'm not going to count out the next candle, okay? If the next candle after this 5-day close is able to bullishly engulf this one, then I can say that we literally just repeated what happened over here. Okay, so if the next 5-day period just takes out this candle completely, just makes it completely negated, then this will similarly be the same thing that happened over here, and that might be the entry signal, the kind of front runnable entry signal to the upside, especially considering those lower time frames have pretty easy thresholds to meet, should that happen. But yeah, just where we are right now, it's not the best look, that's all. So I think that I am going to leave that there. I don't really see the play. We did get a couple of those mean reversion plays this week, so that's cool. But just right now, I think I'm just going to chill out. And let's go back to the 1 hour, just see what's going on there. And on the 1 hour, it does look like we're continuing to drop a bit. You can see that we've now breached that floor that I was talking about. And so, again, like this could just suggest continuation to the downside. Now there is 27 minutes left in this candle. If it does, engulf this one and then come back up into the momentum pool, then very similar to the discussion that we just had about the 5-day, this could be the first kind of reversal on that. But again, we just really need to be above that $26,500, $26,600 area to get some of these lower time frames, going, and then we need to quickly get above that. So, guys, that's our alpha for the day. Stay safe and happy trading.